Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock. And if you didn't know, recently Sofi shareholders have given their management the authority to initiate a reverse stock split. Now hold the phone, this doesn't necessarily mean that their management will initiate a reverse stock split, which investors are kind of split on. Some investors want a reverse stock split and others don't. However, I personally think that management will initiate a reverse stock split within the next 6 months, according to my calculations. So we're going to be going over some evidence for that and what that means for the Sofi stock price. We're also going to be analyzing 2 other articles that are going to be describing to us why the SOFI stock price is going to be extremely volatile over the next couple of months. And then lastly, we have a Bank of America analyst that highlights how fintech companies, specifically Upstart, Affirm, and Sofi Technologies, are going to be hit extremely hard because a recession is basically inevitable in their personal opinion. However, we are going to be going over the pros and cons of all of these scenarios, and we'll be talking about the latest stock news updates for the SOFI stock and SoFi shares in general, as well as what you can do as an investor to keep your money safe. For more videos like this one, remember to go and smash that like button right now, comment your thoughts down below about SoFi stock, subscribe if you are new, and without further ado, let's just jump right into today's stories. If you didn't know, Sofi Technologies is a Fintech company, which is a financial technology company, and they essentially operate as a digital bank because they have an app that gives their customers anything they could probably need in terms of financial services and or financial products. Currently, the SOFI stock price trades for around $5.95 per share. However, investors as well as stock experts think that the company could surge all the way up to $22 or $7 within the next 12 months. Now, I do want to comment on a previous video that I uploaded regarding how the SOFI stock price or the SoFi stock price would actually drop in price after shareholders gave over their authority to management to perform a reverse stock split. And that's exactly what happened, because as you can see, on July 12th, which is when the vote actually took place, the stock was around $16.13. However, from that peak, if we go on throughout the day, you can see that the stock price has actually started to fumble downward and hit a low at market open at 9:30 on July 13th of $5.84. However, recently, it has actually started to appreciate again very slightly, just reaching $6 per share before falling back down to around $5.95 per share, which is where it's hovering right now. So essentially, the SOFI stock price did indeed drop in the short term due to this decision, so our prediction about that was right. However, this is not to say that the stock could not continuously trend downward or even spike up later on. This was just an immediate catalyst because I think in the future, specifically sometime around 2024, when the company turns profitable, that's going to act as a fantastic catalyst for the SOFI stock price, which could cause it to appreciate rapidly, which could cause a short squeeze if shorts have not already closed out their various positions in this company. Also, I want to say when the student loan moratorium eventually ends, which I've done multiple videos on this, that's also going to act as a phenomenal catalyst, which is going to increase the overall SoFi stock price. So those are 2 huge catalysts to look forward to. One catalyst is going to be coming either at the end of 2022 or the beginning of 2023, and that's going to be when the student loan moratorium ends. And then in 2024, we have another great catalyst of the company potentially become profitable according to current projections. But I want to focus on the news that happened recently, where Sofi shareholders gave the authority over to Sofi Technologies management and their board of directors to potentially enact a reverse stock split. Now, as of right now, Sofi Technologies has not officially commented on whether or not they plan to perform a reverse stock split. This is just an option that the board of directors now has, and they are considering a reverse stock split. The CEO of Sofi Technologies even said, and I quote, "This is very much about giving the board an option to be prepared for some scenario that we can't predict today." We are incredibly proud of what we have built, but markets can be irrational. We think we have a durable business, so our confidence is in no way reflected in the ask for this vote for our board, end quote. So basically he's saying just because the market is very irrational right now and Sofi Technologies is trading at a substantial discount, as long as the market remains irrational, they are going to have this in their back pocket to potentially spring a reverse stock split, which is going to increase the overall stock price by lowering the amount of overall shares. But why would Sofi Technologies even be considering a stock split in the first place? Well, in previous videos, I've gone over multiple reasons, but I actually want to fire back on some of the reasoning that this article specifically highlights, which I definitely disagree with. For instance, they highlight how a reverse stock split for Sofi Technologies, let's say you have 10 shares at $6 each, so you have an overall value of $60 invested into the company. Now, if a 1 for 10 reverse stock split happens, you now only have one share, but that one share is now worth $60. So although it lowers the amount of overall shares that you own, it increases the per share price of the overall company. However, this does not interact with the overall market cap of the company, and I've also seen another comment pretty frequently, and this is probably coming from investors that don't understand that it's actually the market cap increasing which gives you your stock price appreciation and vice versa. So for instance, some investors think that it's less difficult for the Sofi stock price right now to surge from $6 to $12. However, if the company is now worth $60 per share after a 1 for 10 stock split, that it's somehow harder for the company to then achieve a $120 stock price, when according to the market cap, those are equally as difficult as each other if we're talking pre and post reverse stock split. Now, I do want to mention that a 1 for 10 reverse stock split is not set in stone, and that could definitely change. I just think they're going to do either a 1 for 5 or a 1 for 10 reverse stock split. But the reason that this author highlights is that they say that the SOFI stock price is going to appeal to more investors and become more accessible to investors at a higher stock price. And I agree with them, but only halfway. I do understand that increasing the overall share price per share is going to appeal to very risk-tolerant investors, because normally larger cap companies have a higher per share price for their stock. So I understand that a little bit. However, I disagree with the part where they say that a higher stock price is more accessible for investors, and this is where I want to push back. For instance, let's say an investor does not have access to fractional shares or fractional investing or share slices. If a reverse stock split goes through and the Sofi stock price is $60 per share or even $30 per share, if you do not have $60 or $30, that means you will not be able to buy this company. However, on the flip side, if the company keeps its current stock price of around $6 or $5.95, clearly that person would most likely be able to afford that, because now they can buy an entire share. So I actually disagree with half of what this author is saying right here. However, he does rightfully point out that a higher stock price is more attractive to brokerage firms that more often than not actually advise their customers to buy stocks that are operating at a higher share price, because the majority of the time those are blue chip and safer companies. Those are blue chip companies and therefore safer companies to invest into. He also rightfully points out that some institutional investors have certain policies in place that prohibit that particular institution from buying or buying too much of a company that has a very low share price due to their risk management policies. So a lower priced stock is actually hurting them in this particular regard, but I would say that is relatively rare in my personal experience. And then lastly, the author points out that lower priced stocks are perceived by some people and investors as a more risky and speculative investment, and that just echoes what I said earlier, which in my opinion has been very true. However, Sofi Technologies is still a very strong company when it comes to their fundamentals, because they're financially healthy. So a reverse stock split would actually not be the worst thing in the world if their investors are smart, because literally a reverse stock split shouldn't have the negative connotation that comes alongside it. The reason why reverse stock splits are so looked down upon is because because the majority of the time, struggling companies end up doing a reverse stock split to remain listed on a certain index. Because once the stock price falls so low, that company can actually be kicked off of that particular index. But in the end, Sofi Technologies management will be the deciding entity on whether or not to initiate an official reverse stock split for the Sofi stock. So I can't wait to hear their official announcement, which I think will come out in the next 6 months, and I again think that they will implement a reverse stock split. Otherwise, there wouldn't be a real reason to gain the approval from shareholders if they weren't even thinking about a reverse stock split. So for me, because management is thinking and pondering about it, I think they are going to initiate a reverse stock split due to the current stock market environment. Now let's move on to how the current stock market environment is really negatively impacting all fintech companies, not just Sofi Technologies, which would include other fintechs such as Upstart and Affirm, which are other stocks that I've covered on the channel. However, for me personally, I would rather invest into Sofi Technologies than Upstart or Affirm. Upstart Holdings, ticker symbol UPST, and Affirm Holdings, AFRM, we will be talking about for the rest of this video, and we will also be going over the latest news updates for Sofi Technologies. So, we're going to start off talking about how the Federal Reserve is continuously and aggressively increasing interest rates to get inflation under control. However, according to the Bureau of Labor Statistics and their most recent inflation report, the Consumer Price Index, or CPI, has spiked around 9.1% year over year in the month of June. And the reason this is bad is because economists actually projected and were expecting around an 8.8% increase, not a 9.1% increase. And if you didn't know, the CPI index tracks how expensive everyday items that you buy are becoming. So clearly, we don't want the CPI to be high. We would want it to be lower, especially in this current inflationary environment. This indicates and tells investors that inflation is still running rampant and the Federal Reserve has yet to get it under control. So this not only means that the Fed will increase interest rates again so they can eventually catch inflation, but it means that growth stocks and companies that have debt and fintech companies are going to be hit very hard, and that's what we've actually seen with Upstart, Affirm, and Sofi Technologies. If you didn't know, Upstart focuses and specializes on artificial intelligence-based lending, particularly for their underwriting policies, which determines whether or not somebody gets a loan. Sofi Technologies, like we said earlier, basically runs a digital bank, and Affirm is a buy now, pay later company. So I already made it clear that Sofi is my favorite among these companies, but it doesn't mean the other two companies are bad, but I do want to highlight that all of these companies are extremely risky. And the reason all three of these companies are being very negatively affected is because with inflation continuously rising, and we've seen that in the CPI data, consumers in the economy are likely to cut back on their overall spending habits, and this is also going to lower demand for products and services in the overall economy. This means people are less likely to start their own business and take out any type of loans, which is going to hurt Upstart, and because people are buying less things, a buy now, pay later company such as Affirm is also going to be negatively impacted. Lastly, Sofi Technologies is going to be negatively impacted because during times of economic volatility, people do not like change. They are looking for something stable and something that's always been there for them, which is probably the bank they are using right now. So this is going to prevent them from changing banks. However, these rules are just general statements and they do not apply to everyone. Upstart in particular currently trades at $25.13. However, investors think that the company could drop to at least $15 by the end of this year, or some analysts believe that the company could surge to around $69 in the next 12 months. In a similar scenario, right now Affirm Holdings, ticker symbol AFRM, is trading for around $20 per share, which could fall down to close to $15 per share. However, some very bullish positive investors believe that Affirm Holdings could be worth $80 in the next 12 months. So clearly, there is very bullish momentum behind some of these companies. However, I do want to highlight that these are very speculative companies, and again, out of all of these companies, I prefer Sofi Technologies for reasons that I won't get into in this particular video. Lastly, I want to leave you with some bearish news, but news that does have a silver lining. For instance, a Bank of America report came out, and they forecasted that the United States will fall into an economic recession officially this year, in the year of 2022. They also project that the unemployment rate will increase from 3.6% all the way up to 4.6% by 2023. So this is very negative news. And what makes this even worse is that around 3 months ago, Bank of America did not expect a recession this year, and they also did not anticipate a recession in 2023. Now, lastly, here's the silver lining. All economists do not agree that there is going to be an economic recession this year. There are other economists that don't think a recession is going to happen this year. And I personally think even if a recession does happen, I'm going to continuously be buying into ETFs, mutual funds, index funds, and my core plays. So it's really not going to matter that much for me. I view this as a fantastic time to buy the companies that I like at a very cheap discount, which would include Sofi Technologies. But as always, I don't overallocate more than a 5% allocation to any single risky growth stock, which would also include Sofi Technologies. But with that being said, I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.